From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hi, welcome. Well, hello, as we say. This is the COB, all the stuff you need to know about the day that was. I'm Nadine Blaney.
I'm Kyle Rodder, and it looks like we might just claw ourselves back into positive territory today. The ASX 200 is up by 0.04%. The CBO 200, from what I can see, up by a similar amount. So it's been a bit topsy-turvy.
It has been. We came out of the gates pretty hot. According to the SPY futures, we did what we were supposed to do. And then just really lost momentum at that 230 mark, as you can see in particular. But, things have definitely started to turn negative. Picked ourselves up a bit. So it looks as if we will have some green on the screen, but a bit surprising. And when I don't know, Kyle, when I'm trying to make rhyme or reason of it, the banks are mixed. The big miners are looking all right, save for Fortescue. Lithium really hit hard, but one of the worst sectors, and we'll get there in a moment, is consumer staples. Woolworths is off by 2%.
So
I don't know why.
Neither do I, and Coles is off as well. So I don't know if there's anything specific to that, the supermarkets in particular. Maybe it's just coincidental, I'm not too sure. That is certainly where we're seeing some of the weakness coming through the market. Also lower today too, some utilities, IT stocks pulling back. So in fact, we're seeing actually most sectors in negative territory. I do believe, I'm just trying to get an update here on my computer. Yeah, basically that, consumer staples, IT, utilities, all looking pretty soft. I don't think really healthcare showing any signs of, meaningful strength at all. Yeah,
and some three themes. So I called it Market Monday-itis. Didn't know if you'd approve, but there we go. In China, this is the other thing, is that our market really bucked the regional trends. So we've still got Asian markets higher, China's market higher. I started the day by chatting with Chris Weston from Pepperstone, who said, watch Chinese markets because we're likely to follow that momentum. But clearly not so. And that's even despite, Chinese markets doing well, despite the fact that we saw further signs of slowing in factory activity. I'm not sure. Perhaps some of our wariness is ahead of the RBA tomorrow.
It could be so. And we have got a reasonably significant week ahead of us. There's more earnings locally, more earnings in the United States, NFPs at the end of the week. So, we have seen that sort of pattern over the last week of perhaps market Monday-itis, where no one wants to make any sudden moves before, the rest of the world gets underway. But again, here we are, a flat session.
And I should say that US futures are slightly negative, So we're not giving you any really concrete reasons as to why we're seeing this weakness in the market, I suppose, but we'll see what we can pull out from our guests in just a tick. We did have a lot of quarterlies coming through, and I think some of them did disappoint. So, IGO for one, down by 4.5% in the wake of its update. So clearly, market not liking the guidance being given there, even though it does plan to, target a payout range of between 20 and 40% of underlying free cash flow.
Yeah, and some weakness coming through there from IGO recently, because there was also that, guidance downgrade over a few weeks ago that also hit the stock. So again, some hot sentiment there for a little while. It was up for much of the year, but pulling back just a little bit. Also had Origin in the news as well. So you can see there reporting its AP LNG revenue down 12.3%. And the stock itself, I haven't checked on it.
Yeah, down by about 0.9%. I think maybe we're not as obsessed with the Origin because that Brookfield mega deal, the takeover by that Brookfield-led consortium is, it's in the final throes of going through. Linus shares did well in the wake of its quarterly, up by about 3%. So it's interesting because really has been hit by pricing. So price for rare earths come off a lot, but the sales are still going well. It's making progress. When it comes to its processing plant in WA, and Kalgoorlie also updated on its Texas processing facility and also the Mount Weld expansion project. So good day for Linus.
Absolutely. Silver Lake Resources, however, posted record quarterly production of over 81,600 ounces of gold, but you can see absolutely getting smoked in today. We had I think Andrew had a discussion with Henry Jennings about some of the issues there confronting the business, but certainly the biggest laggard for the day today. I suppose in contrast, Gold Road Resources up just a fraction. Yeah,
and if you're looking for some further analysis on those quarterlies, particularly the ones that came out today, how it might influence what comes through in earnings season, I had a good chat with Harry Watt, who joins us from Shaw Partners and Market Matters, and that is up online. So part of the point of this program is really just to point you in the direction of a lot of the great interviews that we've done throughout the day and remind you that you can just go online and catch up in your own time. Other than that, look, I sort of was keeping an eye on Bubs today. I thought it was really interesting that the share price did well, even though a lot of it sounded pretty negative, up by more than 5%, even though revenue was down 60%. But I suppose a lot of the negativity around China has been priced in, and they gave a little bit of an update on the US market, and it looks like, things are progressing as needed.
And we've had a bit of guidance from Bubs too, so they've aired a lot of dirty laundry, it has to be said. So maybe the worst is priced in, or perhaps one would hope that the worst is priced in for Bubs, but nevertheless, like you said, maybe a slightly counterintuitive rally for the stock.
Sectors, we touched upon it already. Here's the final picture for Woolworths and Coles. God, I was at Woolworths so many times this weekend, I don't know how the share price is lower. Gosh, Treasury Wine Estates up by about 1%, but yeah, it was really bucking the trend. You mentioned tech as well, getting down. But you know what was up today? I don't know if it's on this next page, but Life 360 up by close to 2%, ahead of its results. Goldman Sachs lifting its price target by 10% to $9.20, saying that it's likely to maintain its full year guidance for now. I think there's another page in the All Tech Index, and we'll be speaking with Elise Kennedy later this week from Jarden, just as what to expect from some of these tech companies come reporting season. Yeah,
an absolute specialist in the space, of course. Healthcare, we did say before that it was one of the, few bright spots in the market today. CSL, again, the tech head in me constantly points out that the bottom of the range here, we're really trading at for CSL. So up by about 0.61%, but it was broad-based strength across the healthcare space, as you can see. Going down the list, Sonic, Cochlear, ResMed, Fisher & Paykel, all the favourites there, finishing higher for the day. I think we go deeper down the list. It's a little bit more mixed, but Ramsay's up 2.34%, so that's fairly handy. Ansell too, flat more or less, but has been obviously catching the ire of some investors recently.
We like your tech head, Kyle.
Yeah.
Don't be disparaging of yourself. We like it. All right, what else do we have here? Retailers. Yeah, that was another interesting. So while staples were down, consumer discretionary was up. That includes JB Hi-Fi, Harvey Norman, Lovisa. Again, I mean, is it because the market is pricing in a pause in rates? I mean, I don't know. We still have a lot of the impact of the rate rises that we've had thus far set to flow through. You spoke with Paul Brennan today about the RBA? What does he think?
He thinks a pause, an extended pause, I think, pointing to last week's CPI figures as justification for that. But he did point out that there were some areas of stickiness in that data that we should all be aware of, especially as well, a few little things, especially from an institutional perspective, kick in over the next few months. So obviously the changes to wage settings, but also just the changes around indexation that happens at July 1st. So could make the picture a little bit more complicated, but the point is they can hold and wait and see for that.
We'll see. I enjoyed reading all the commentary. Warren Hogan, for one, in the Australian Financial Review, who's a regular guest here on Ausbiz, saying that, look, low should hike. Clear some of the air for Michelle Bullock, who will take over toward the end of September. So, do the heavy lifting now so that she can get a few meetings under her belt without making any monetary policy moves. Stock of the day, Life 360. We just mentioned that. Let's find out what our expert guests had to say.
An interesting model. I think it has upside, and look, my theory is simple. If you're in an upgrade cycle, you stick to it till something goes wrong, and it has to be something structural. If it's a market-related one, that can always turn around, and I don't see anything wrong with it. So I think that kind of holds it together. But look, has tech stocks run? Yes. Is that kind of flowed into everything? So if you're I guess got an upgrade cycle, you're going to get more love than the rest. So it's done well. Still a loss-making stock, but I think the thematic still is pretty good. I think it holds up. I'm not, if you're holding, it's a hold for me. I'm not saying that this is something that the market doesn't know, because every broker has upgraded to 10-15%, so they're basically staying ahead of the price. So I think it's a good story to hold. I'm not chasing it here, but I think it's fine.
I can see both sides of it. For us, we've had a look at this, and the view was that this feels more like a feature rather than a product.
Right.
And there's always a concern that Apple, which already does something like this, could expand the product range, or that Google could add it onto their phones, which they have a rudimentary function. But it always feels as though that this could be internalized into an ecosystem. And that's why I've always thought it deserves a lowish valuation, which it has never displayed. Although, look, it is a good business. On the other side of that, it is one of the few tech businesses that has garnered millions and millions of overseas users with user base that continues to grow and pays real cash flow. So it is a success story and it has worked. But I just wonder about the longevity of the product.
So that view at least standing in contrast to what Goldman Sachs believes, saying that at the full year profit likely to remain the guidance coming through. So there you go.
Interesting. Well, there you go. Let's get to view actually from our guest on whether he's a Live 360 fan, Carl Capolinga from Think Markets. Carl, I know you scan the charts pretty religiously. Yep. What's it like for 360, you reckon? Is it a potential buy if you had to make the call?
I think 360 looks really good. I mean, if Gaurav hates it, I'm probably going to like it. So it's just a default in terms of your deep value versus the trend. And the trend is up. Look, it's one. It has been coming up quite often in my Tuesday sessions. So clients are interested in it. Many of them are on it. We've got it around that sort of $6 mark. It's currently around about $7.50. I think the trends are holding up. So look, I'd go a hold on it. I don't think I'd be rushing out to buy it if you didn't have it. So new money is probably just afraid of a couple of black candles up around that $8 mark. But there's nothing really so sinister in that chart to suggest that you would start to manage your risk by exiting just yet. And I'll give you a level where if you do have it, it is probably widely held among viewers, but look below 720. So if it's starting to close, 717, 715, that's when I'd be starting to take some risk off the table.
Okay, let's get bigger picture now, because lots of talk about the S&P 500 being up more than 19% so far this year. Big tech, the Magnificent Seven, all the rest of it. It is, right? And our market, relatively speaking, underperforming. But is there something we're missing in being a little bit tough on the local market?
Well, I think we can be very harsh on the local market because it hasn't had those ingredients, those magic ingredients that, as you mentioned, in the US, we don't have any AI or really listed AI companies, that big tech companies like Apple. Then other companies have done really well over there, like MasterCard, Visa, Boeing, McDonald's, Coca-Cola. I mean, just these wonderful names. What have we got? We've got a few banks and a few resources. But the great thing about being a bit boring is that unlike in the US, we pay some amazing dividends. Our dividend yields up around 4.5% per annum, and it's typically fully franked. So when you add those dividends back, we're not actually doing that bad. And in fact, we're going to close on a monthly basis at an all-time record high in terms of total return. And I think that's
Sorry, say that again, Carl. So for this month, July, we're going to close at an all-time record high when you include...
We're just about to pip it, yeah. So I've sent you through a chart. I don't know if you've got that one handy.
Not in this program.
You don't have it? Doesn't matter. I'll tweet it. But yes, definitely one to keep an eye on. It's the All Ordinaries Total Return Index. It adds back dividends. And I use the All Ordinaries specifically because it's a much broader representation of the Australian market. We're talking about 500 of the biggest Aussie stocks, whereas the ASX 200, which also has its total return index, only 200 stocks.
Yeah, interesting.
Yeah, there you go. Well, I suppose the thing that might drive us higher tomorrow is, of course, that RBA decision. So, I mean, is that really just the next catalyst for the market, whether we do get that pause? I suppose it does look like it might be baked in now.
I'm not sure if the pause is baked in. I've listened to your show all day long, and a few of the analysts that came on that I really do respect their view are calling for hikes tomorrow, and they're starting to convince me that maybe we're going to get one. And I think, as you mentioned in your sort of introduction there, that's probably one of the key reasons why we're a bit softer today. I do think that's one of the reasons. So I think, no, it's very much a live meeting tomorrow. I'm not sure, because I think maybe the whisper is that we might get a hike there. I don't think it's going to negatively impact the market too much, though. And I know that's a little bit counterintuitive. If you look at the futures, it's not particularly baked in. I mean, we're expecting the interest rate to be on average about 4.16% tomorrow. So, that's a very small probability the market is apportioning to an increase. But it is, I think viewers need to understand, it is very much a live meeting tomorrow and anything can happen.
Okay, but besides that, I know that we get non-farm payrolls in the States on Friday. We still get Apple, we still get Amazon. There's lots to take into consideration. But markets are seasonal often. And in North America, we're entering August, and normally markets there slow down because there's a lot of holidays that are getting taken. You know, the rubber is hitting the road. It's driving season, all the rest of it. What seasonal factors do you take into consideration now?
Well, look, I don't have the data for the US to hand. I might have to go check that after this. Now you've got me thinking about that one. But I do know for Australia that August is a very good month of the year. July is also a very good month of the year. I mean, Kyle, maybe we had a chat, I think maybe at the start of the year in one of our spots on the trade where I said that July is probably about the second best month of the year, looking at sort of 2.5%, 3% return over the last 40 years. And looking at today's close, we're going to come in at about 2.9%, so almost perfectly descript. August, not quite as good over that 40-year period. We're talking about sort of a 1.5% to 2% gain. But still, when you think about the overall Aussie market is up about 7 or 8% in a good year, to get 1.5% on average in a single year is actually pretty impressive. And the reliability on these 2 months is very high. So you're looking over that 40-year sample, you're looking at sort of about 65 to 70% for August and July in terms of them delivering that positive gain. So I know we've got plenty on our plates for August. Obviously, we've got earnings season over here. As you say, it gets a little bit quiet in the US. But that doesn't mean that a quiet market can't still rise. Often in a supply vacuum, if there's a bit of demand out there, we can do well. So look, I would say for viewers who are concerned about the FUD out there, the fear, uncertainty and doubt, history says that August is a pretty good month.
Carl, great way to leave it for today. The end of one month, the beginning of a next, and perhaps something to look forward to. Carl Capelinga from Think Markets, thanks for your time.
Always a pleasure.
Bye, Carl.
Thanks, Carl. Thanks,
Thank
man.
you.
See you later.
Okay, there we go. Well, actually, it's a good time to sort of just check in, I suppose, on the monthly return and, perhaps the, obviously, day's performance as well. But just very quickly, the month of July has delivered us a 2.88% increase for the 200. So there you go.
Take it. We'll take it.
I'll take it.
Doesn't sound as dramatic as, I should actually check what the monthly is for the S&P 500. But yeah, 19%. You wouldn't have thought that, when we started out this year, would you?
No.
So let me look this up. S&P 500 over the past month. What is that?
2.96.
Okay.
Yeah.
Up 3%. Not too bad.
No, yeah, we've had some of those cyclical areas catch up. I think, May and June might have been a bit more tech heavy, but maybe the good old ASX is making a comeback. We'll see. China.
Yeah. Well, let's see what happened today. Imugene is one of those companies that, interesting. Macmillan Shakespeare. Imugene was actually top of the 200 from what I can see. What are you seeing there? It was up by about 3.5%. Linus as well, up by 3%. Perpetual looking pretty good. It's up by 2.5%. One of the brokers weighing in saying that the sell-off recently looks to be out of touch. That's according to Bell Potter analyst Marcus Barnard. So that's an interesting one because, Perpetual was hit hard last week. Yeah,
it certainly was. I think Imugene may have fallen out of the top 5 because it was on 2.5% higher on my watch, but it's a small stock. 1 cent move on that thing can mean a big thing. Or I should say it's a, anyway, go on. Laggards. Let's have a look at that. Needed to clarify that. I didn't want to insult anyone, but I don't have the patience. Down 20% for Silver Lake Resources. IGO also down today after its update, off by 4.5%. Resolute Mining as well, 5% lower. So one to keep an eye on. And Zip's
not in the 200 anymore, I don't think. Anyways, it's off by 4.3%. We've got Square reporting on Friday. So look, that's one thing to take into consideration. It had an extraordinary general meeting today. Now, I do not know the outcome of that, so I'm not going to speculate, but market not liking something in there, down by about 4.3%. And Megaport, that one's been so volatile as of late, so no news today. But
it ripped last week.
Absolutely.
It's just probably paring back just some of those gains after what was a very pleasant upside surprise for a lot of investors. Let's go to the small cap. So this is where your time to shine is. Nadine, Redbubble, if there's a proxy on what the RBA might do, a high beta proxy on what the RBA might do, it looks like it would be Redbubble. Absolutely ripping over the last few days when some of that softer data came through. Up again by 15.8%. I'm not too sure if there's any.
There's no news that I can see. Yep.
Okay, well there you go. It's just a thematic perhaps.
Yeah.
But up the top of the pops today as well with AMA, which again I don't know if it's necessarily a news story there.
Yes, it is, because I think it came out today and reaffirmed its guidance. Actually, it was out with its quarterly, because I know that a viewer had written an insight. Can you please discuss it on the call? Up by 16%. So its quarterly must have looked pretty good. Yep. Vita Medical is on there for no apparent reason, and Enserata in the SaaS space. On the flip side, look, I went through these earlier, and that's what I meant to look up. Star Pharma. Let's see if it was out with a quarterly today, or what's behind that move. A partnered program update. It was in a trading halt, so it's come online, and really a negative reaction to that.
Yeah, 30% lower, so pretty brutal. Biotechnical.
Oh no,
AstraZeneca has pulled the plug on the development of AZD0466 following an internal review that has promptly, and I should say that I'm reading Motley Fool here, prompted a small number of asymptomatic adverse effects. Well, there you go. I mean, these stocks.
It's binary outcome a lot of times when it comes to these test results, but also if you've got a partnership and they pull out, I mean, that's
working for a broker or a dealer in the past, you always had to have that little bit of extra margin for these companies because they move, and like you said, in a very binary fashion. Okay.
What is on tonight? Well, look, see here. It's Eurozone second quarter GDP as well as inflation, and we also get the Chicago PMI and the Dallas Fed Index. So we will have something overseas to talk about, but I dare say, Kyle, the only thing we're going to be talking about tomorrow, or one of the only things, is the RBA meeting.
Yes, and I think we were talking before about what expectations were. 55% of economists calling a hike, but when it comes to market pricing as of today, a 7% chance of a hike. So the balance of probabilities for a hold tomorrow. But of course, we've been surprised before. Maybe less impetus to surprise this time around, but we have been. So
it's interesting because you've got like Westpac calling for that 25 basis point hike still. And then you've got, Capital Economics. I spoke with one of their economists today. He said, we're still calling for a hike. But after that retail sales read, it's just line ball. I mean, we use these phrases over and over and over again, but this month it really does feel like it's line ball, doesn't it? I mean, market pricing is definitely saying one thing, but when you're speaking with people, it's way more nuanced.
It happened in June. We were sitting here and the market was pricing in 10% chance of a hike, and they hiked. So again, there seems much less data impetus, especially after last week's CPI figures, but it's a live meeting. At the end of the day, it's still a live meeting. I think that's fair to say.
So what was the picture like by the time all the final trades went through? Well, the CIBO Australia Index flatlined it. When we take a look at what happened on the S&P ASX 200, managed to end just in positive territory, up by about 0.1%. 7,410 was the final figure. In the smaller end of the market, we saw the small ords up marginally, up by about a tenth, or 0.1% as well, just about 3 points. And still keeping an eye on US E-minis coming under a bit of pressure. And oil, after a stellar month, oil came off in the Asian session today. And that's why we saw Woodside turning around as well. And Woodside ended the day negative.
Interesting. Okay. Well, there you go. I did rubber to start the week. We've got 4 more trading days to sort of, or maybe cast a bit of a direction.
August tomorrow. Can't believe
don't tell
it.
me that.
Where's this year gone?
Time, right?
It is going fast. Look at my grey hair. All right, Kyle, time to wrap. Don't look too closely.
Maybe you can catch up on everything today on your platform and your app. But we'll be back with you tomorrow morning. Have a lovely evening.